It's been 5 years since the Chinese head of state visited France, and this year marks 6 decades of cultural cooperation between the two countries. But the uncertain future of its trading relationship will be at the top of this visit's agenda.
I want to reiterate that China is committed to high-quality development, firmly pursues the opening up strategy of win-win cooperation, continues to build a market-oriented, law-based and international business environment, actively promotes foreign investment.
Xi's first stop will be in Paris. On Monday, he will meet the French President Emmanuel Macron and the President of the European Commission, Ursula von der Leyen, before heading to Serbia and then Hungary. The impending visit comes at a time when the European Union is threatening to slam China's electric car industries with tariffs over huge subsidies, something which the EU says gives Chinese manufacturers an unfair advantage.
But global markets are now flooded with cheaper Chinese electric cars. And their price is kept artificially low by huge state subsidies. This is distorting our market.
But Chinese car makers say otherwise.
The competition in the field of electric vehicles is forward-looking, inclusive, and in line with the trend of the times and technological development, which is in conformity with the global pursuit of carbon neutrality. It's untenable and cliché to accuse China of overcapacity.
With China's economy facing an uphill battle, worsened by falling trade with the US and its staunch support for Russia's war on Ukraine, the European Union could have some leverage over Beijing.
It is of great significance to promote China's relations with France, Serbia, Hungary, and overall development of China-Europe relationship. It will also inject new momentum into the peaceful development of the world.
But 2 years into the war in Ukraine and EU member states still deferring on trade options with China, the outcome of this visit remains uncertain. Lape Larinoye, TRT World, London.
The EU-China trade figures show fluctuating deficits, with exports rising in 2022 and deficits decreasing in 2023. Import trends highlight shifts in product categories, signalling evolving market dynamics. Now, let's take a closer look. In 2022, the European Union exported goods valued at approximately $427 billion to China, marking a notable increase of $7.5 billion compared to the previous year. This upward trend suggests strengthening trade relations between the EU and China. However, the EU's trade deficit with China witnessed a significant decrease in 2023 from $427 billion down to $313 billion in 2022. That's a decline of $114 billion compared to the deficit recorded in 2022, marking a substantial reduction of 27%. Telecommunications equipment remained the most imported product from China, although its value declined from $68 billion in 2022 to $60 billion in 2023. Electrical machinery and automatic data processing machines followed as the second and third most imported goods, respectively. Let's get more on this with Duncan Ringley, Pantheon macroeconomics chief and China economist. He joins us now from London. Thank you for being with us today. So, this is Xi Jinping's visit, the first in 5 years. First of all, how and why is this significant?
It's significant because France is a key country within the EU. It both leads the way in terms of setting the strategic direction for the bloc alongside Germany. And it's also one of the biggest economies within Europe. As your report was just mentioning, there's a lot of sensitivity right now within the EU and European countries about China's electric vehicle production and the real surge in EV exports over the last year and still continuing this year, and the concern that it's going to threaten local automotive companies in France and elsewhere.
As we've just said, what factors do you believe contributed to the decrease in the EU's trade deficit with China in 2023, and how might all of this impact future trade relations between the two regions?
Yeah, I think a key factor is the EU has been pushing to substitute imports from China with imports from other countries in Eastern Europe or made locally. It's still a huge trade deficit. Don't get that wrong. But I think it's part of this determination, especially after the COVID and with the war between Ukraine and Russia, to sort of reduce risks related to supply chains.
Telecommunications equipment remained the most imported product from China, although we did witness a decline in value. What strategies do you think China will employ to maintain its dominance in this product category, at least?
Yeah, China's production of telecom equipment, there's a couple of parts of it. One of the biggest part in terms of value would be mobile phones. And the other part would be the infrastructure, things for making the backbone of 5G and future communication networks. Now, many countries in Europe, elsewhere have imposed restrictions on China, such as Huawei, companies like Huawei, bringing in the infrastructure. So I think that's going to be difficult for China to do. On the mobile phone front, China is still very successful in making the sort of cheaper low end of mobile phones, and that's just going to continue, I think. Where the issue has been for China is restrictions placed by the US on Chinese company accessing the most advanced semiconductors needed to make the most advanced mobile phones. And so I think in that area, you do see Chinese companies like Huawei trying to make their own, access their own advanced chips, but they're still a little way behind. So I think what we'll see is China still being very competitive in terms of those, the cheaper mobile phones, which can be very good still, but they're sort of hamstrung into getting to the most advanced areas.
Duncan Ringley, thank you very much for being with us, and thank you for your analysis.